The Fed looks like it's almost 100% priced now for October the 30th. Do you think it'll stop then, or do you think December's a live meeting as well?
I'd have thought that December's live. Your correspondent was talking about low inflation pressures, and it's unlikely to see a big breakout anytime soon in terms of inflation, and so it gives the Fed the room, if it wants to ease. And the cost of being wrong, over easing, they don't see as significant. So October looks likely, December looks very possible. Unclear for next year. A little bit more priced in by the market for next year, but one or two more this year look quite likely.
Do you think there's a danger that the Fed waits too long before it takes action on the consumer? The consumer data are largely pretty good at the moment. But as we've been hearing time and time again, the world economy seems to be largely resting on the shoulders of the US consumer. If we wait for any cracks to appear, won't it be too late?
Well, I think two things. I mean, the first thing is by the time the consumer cracks, yes, it'll be too late. But the Fed pivoted December of last year. They have eased policy at a time when the data's been pretty strong. You're seeing a little bit of evidence of spillover to the non-manufacturing sector. Wage growth in the report on Friday was not strong. I think it's hard to say that they are waiting too long. I mean, they've eased in spite of the fact that, based upon the domestic data, the U.S. economy looks okay.
Andrew, I mean, a lot of talks about the direction of rates, but there's also a lot of talk about the size of the Fed's balance sheet and sort of to what extent the Fed, if they are willing to do this, would actually go. What do you think the Fed is going to do with regards to the balance sheet? Do you see an expansion, and if so, how much?
In the event of a slowdown, I mean, I think the Fed has been clear that QE, quantitative easing, would be a tool that they would use. I don't think that they would do negative policy rates, and so there's a little way to go in terms of policy rates. I think they've been clear that they would do QE if they thought the circumstances called for it. I think that's a way off. I mean, there's elevated recession risk, but on our central forecast, recession's avoided after this weak window, as we've called it, window of weakness in the first half of next year. We'd expect some re-acceleration, but I think further down the way, QE is quite possible if the recession comes about.